Hi there, welcome to kneppyinvests. On the 13th of April, a company I have been asked before to take a look at, Buddy Technologies, went into receivership. And you don't want a company you own to go into receivership because this is potentially the worst thing that could happen to that company. In fact, the worst thing would be liquidation, but receivership is just the next step down or up from liquidation. I'd probably rather a company I own to go into administration. So, what is receivership and what is the difference between administration and even liquidation? So, I will touch upon some definitions first. And to be honest with you, I didn't know much of a difference between receivership, administration. I did know what liquidation was. So, that's the first step we should take before we talk about Buddy Technologies going into receivership. There are a plethora of definitions out there when it comes to administration and receivership, but generally those definitions are very similar. And I found these two definitions from BT lawyers. There were quite a few from lawyer companies, also from companies that help companies that are going into administration or receivership. So administration is the one I know a fair bit about. Most of the companies that I do see go into administration, it is voluntary administrations. And that is when the company directors appoint an administrator to the company because there may be some insolvency issues. A receivership is a little bit different. That is when a receiver is appointed by a secured creditor. And they have some debts they think they might not be able to get back from the company. Another good difference between the two that I did read, receivership differs from administration as the latter works to protect companies from their creditors. That's administration. Whereas receivership is initiated by those creditors or banks that believe the business cannot pay its debt. Unlike in administration, directors cannot place their own company into receivership. So that's the difference between receivership in administration, and Buddy Technologies went into receivership, not administration. And the last thing I didn't mention is liquidation. And to be honest with you, you don't want your company to go into liquidation. That means all the assets that get sold, and then all the money that is raised by the selling of the assets goes to the creditors and to the shareholders last of all. And more than likely, shareholders get absolutely nothing. Now, let's have a look at Buddy Technologies. Let's go back into the past just to see why Buddy Technologies might have gone into receivership. The first step we're going to have is have a look at the financials, the trailing 12 months. Revenue 25.3 million, unprofitable, so loss making 55.6 million. Not only that, operating cash flow negative by 15.9 million in the trailing 12 months. They had net debt almost $20 million, and this all comes back to debt. So don't forget, receivership is when a creditor, someone who the company owes money, doesn't believe the company will be able to pay them back, and they're the ones who put a receiver into place. Interest, $8.2 million of interest paid. So even if this company was producing a fair bit of cash in operations, they still had to pay $8.2 million of cash because of interest. Again, another reason I don't like companies owning too much debt, because companies like this, even though we're in low interest rate environment, we'll still have to pay fairly high interest rates because the risk assigned to these type of businesses is pretty high. They also had 3.7 billion shares on issue, which had increased from only 79 million in 2013. This company burned through lots of cash, and to get cash, they went into debt and also raised a lot of money, which led to dilution for shareholders. So just looking at these financial numbers, just looking at the shares on issue that have increased substantially over the past 9 years, this was not a good company. Now, I'm just going to go through some points in the half-yearly report, which was released, I think it was the 1st of March or something like that. I'm not going to look at the financials right now. I'm going to go straight to note number 1. And a really important thing in note number 1 is a going concern, which the auditors do write. As disclosed in the financial statements, the consolidated entity incurred a loss of after tax of $48 million and had net cash outflows from operating activities of $1 million, $5.8 million in 2020 for the 6-month period ended 31st of December 2021. As at that date, the consolidated entity had net current liabilities of $7 million and net liability position of $6.4 million. These factors indicate a material uncertainty which may cast significant doubt over the ability of the consolidated entity to continue as a going concern, and therefore whether it will realize its assets and extinguish its liabilities in the normal course of business and at the amount stated in the financial report. So I do look at going concerns in all financial reports just to see what the auditors are thinking about the particular company. And just this going concern in note number 1 in their financial statement did not read very well. So in note number 6, and you can also find this in the Appendix 4C. And funnily enough, Buddy Technologies was not only doing quarterly Appendix 4Cs, they were doing monthly Appendix 4Cs. So I think the ASX was concerned about the viability of this company moving forward. So these are the loan facilities with PFG, and each of these loan facilities was at interest rate of 12.5%. That is fairly high. Again, just because we're in low interest rate environment doesn't mean any loans these companies take will be low interest rates, 12.5%. So for instance, if they had $20 million, that's around or just over $2 million per year they have to pay back in interest. And for a company that's just not generating much cash in operations, that can be a significant burden. For anyone who follows my channel, you'll know I do like to look at cash flow statements, and this is Buddy Technologies' half-yearly report, consolidated statement of cash flows. So the first thing I'm do is usually look at cash received from customers, but I really skipped that, and I just wanted to see if this company was operational cash flow positive. They were not. They were negative by 1.1 million in the previous half year, which was better than 1 year ago, because 1 year ago they were operating cash flow negative by 5.8 million. Not only that, 1 year ago they had to pay 3.8 million in one half just in interest. This year they've brought that down to 1.3 million. So if you do take away the interest paid, this company would have been operating cash flow positive in the most recent half year. Not only that, because they wanted to decrease their debt, they have done quite a few capital raisings. In fact, the last 2 half years, in the financial year 21, they raised 12.8 million. In the most recent half year, they raised 5.7 million. I would say the majority of those capital raisings was to decrease their debt. Now, I haven't gone back in time to see why this company is highly in debt. There must be some reason behind that. And at the time, it might have been a rational reason, a good reason to go into debt. But I would always prefer a company to go down a different route instead of debt, particularly if they have to pay 12.5% interest. Just a few days after they released the half-year report, Buddy Technologies released a prospectus in regards to some shares, about 1,000 shares or something like that. So this was not really relevant to the majority of shareholders. But whenever you do see a prospectus, there is within or contained within the prospectus a risk section, and this is what the company thinks are the risks moving forward for the company. And in section G of the risk part, there was a really interesting comment here in regards to compliance with financing arrangements in regards to PFG. The company is party to financing arrangements with PFG for the provision of various facilities which contain certain customary financial covenants and provisions for facilities of the type provided to the company, which include but not limited to the company meeting certain monthly revenue, EBITDA, and financial ratio thresholds. Having regard to the seasonal nature of the company's business and recent challenges faced by the company has, time from time, failed to satisfy certain of these covenants and provisions, which, unless cured, give rise to an event of default, thereby giving PFG the right to declare outstanding loan amounts immediately payable and failing repayment, enforce its securities over the assets of the company. This was released on the 3rd or 4th of March. And as soon as I read this, my eyebrows did raise, because this was really interesting, that they were actually not satisfying some of the covenants, and PFG could come in and really take control of the company. On the 1st of April, Buddy Technologies did release a monthly 4C. So this company releases a cash flow statement every month. Now, I'm not sure why. They more than likely would have been asked by ASX, because ASX was concerned about the ongoing nature of this business, but not a lot of companies actually release a monthly Appendix 4C. I'm not even sure if it's called Appendix 4C. It could be called something else. Now, when you actually do look at this month, which would be March, maybe it was February, 6, 7, yeah, it would have been February, it actually doesn't look that bad. Receipts to customers 1.9 million. The company was actually operational cash flow positive, even taking into account the interest paid by 277. So they were operational cash flow positive by $105,000, which sounds good. So if they can maintain this momentum through the rest of the year, this company would be operational cash flow positive, even though they do have to pay a little bit of interest. So just reading the 1st of April monthly 4C actually did look positive for Buddy Technologies. Now, there must have been some concerns in the ASX that Buddy Technologies were in a difficult financial position, because they did send a query to Buddy Technologies and they wanted some answers. Quite a few questions they gave Buddy Technologies, and all the answers were given and released to the market on the 4th of April. I'm not going to go through every single question and answer. I just really want to focus on one answer that Buddy Technologies gave to question number 3 in regards to Buddy's negative working capital of 7.1 million and net liability position of 6.4 million. I found the answer, or a section of the answer, really fascinating. And it just shows you how things can quickly change, because this answer talks about how PFG was being really reasonable, even though Buddy Technologies was not satisfying or failing to satisfy their financial covenants with PFG. And what Buddy Technologies said here, for instance, they do not consider its failure to satisfy these financial covenants to be information that a reasonable person would expect to have a material effect on the price or value of its securities, on the basis that really PFG were being reasonable. They were consistently formally waiving Bud's failures to meet these financial covenants. They were not exercising any of its rights under financial arrangements arising from Buddy's failure to meet these financial covenants. They were continually engaging with and continues to engage with Buddy Technology. So it does seem like PFG were being reasonable at this point in time. So it really only took about 9 days before PFG became unreasonable. Well, maybe not that's the right word, but became concerned that Buddy Technologies could not pay them back. And when they became concerned that they could not pay them back, they appointed some receivers. It did not take long from the time the company released that ASX query to the time they went into receivership. So 9 calendar days from the 4th of April, when they said everything was okay with PFG, to the 13th of April, when it was obvious that PFG were concerned about them being paid back by Buddy Technologies. And they appointed receivers, Christopher Hill and Dave McGrath from FTI Consulting. Now, the good news, short-term good news for Buddy Technologies, is the business, the day-to-day business will keep on going, because PFG has provided Buddy with a limited funding facility to allow the group to continue to trade in the short term, and his receivers' intentions to draw down against the facility as and when required. Now, the receivers will shortly commence a process seeking offers for a sale or recapitalization of the group. So this is not the definite end of Buddy Technologies. On the other side of this whole process, Buddy Technologies could continue to be going or moving forward, but more than likely, this is going to be horrendous news for shareholders or current shareholders. You will be diluted highly. Maybe good news is the current directors will probably be turfed out, so a new management team will be put in place. So there are a lot of different scenarios moving forward for Buddy Technologies. It's not the definite end of the company, but it's definitely not good news for current shareholders. That's all I have on this video of Buddy Technologies. Not good news for shareholders. This company has gone into receivership. If you are a shareholder of this company, I'd love to hear your opinion on this whole process. The past of Buddy Technologies, more than likely the CEO of this company and the board are absolutely hated by shareholders at this point in time. I think the writing was on a wall. It's been on the wall for quite a while. I don't like seeing companies highly in debt, and failing to satisfy financial covenants is never a good sign because it takes the power away from the company and the board into the creditor, in this case, PFG. So I'd love to hear your opinion on this company, particularly for those who are shareholders. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. This is it for this video. Have a good day. Bye.